Trading in the Zone. Mark Douglas. To operate effectively in the trading environment, we need rules and boundaries to guide our behavior. To prevent the possibility of exposing ourselves to damage, we need to create an internal structure in the form of specialized mental discipline and a perspective that guides our behavior, so that we always act in our own best interests. This structure has to exist within each of us, because unlike society, the market doesn't provide it. The hard reality of trading is that, if you want to create consistency, you have to start from the premise that no matter what the outcome, you are completely responsible. It takes effort to create the kind of disciplined approach that is necessary to become a consistent winner. You have to understand, with every fiber of your being, the ways in which you are and are not responsible for your success as a trader. Remember, the best traders think in a number of unique ways. They have acquired a mental structure that allows them to trade without fear, and at the same time, keeps them from becoming reckless and committing fear-based errors. Eliminating fear is only half the equation. The other half is the need to develop restraint. Excellent traders have learned that it is essential to have internal discipline, or a mental mechanism to counteract the negative effects of euphoria, or the overconfidence that comes from a string of winning trades. For a trader, winning is extremely dangerous, if you haven't learned how to monitor and control yourself. The consistency you seek is in your mind, not in the markets. It's attitudes and beliefs about being wrong, losing money, and the tendency to become reckless, when you're feeling good, that cause most losses, not technique or market knowledge. If you have ever found yourself blaming the market or feeling betrayed, then you have not given enough consideration to the implications of what it means to play a zero-sum game. Each trade is simply an edge with a probable outcome, and statistically independent of every other trade. If you believe otherwise, then I can see why you're afraid, but I can assure you that your fears are completely unfounded. If there is such a thing as a secret to the nature of trading, this is it. At the very core of one's ability, 1. To trade without fear or overconfidence, 2. Perceive what the market is offering from its perspective, 3. Stay completely focused in the now moment opportunity flow, and 4. Spontaneously enter the zone. It is a strong, virtually unshakable belief in an uncertain outcome with an edge in your favor. The best traders have evolved to the point where they believe, without a shred of doubt or internal conflict, that anything can happen. The essence of what it means to be in the zone is that your mind and the market are in sync. As a result, you sense what the market is about to do as if there is no separation between yourself and the collective consciousness of everyone else participating in the market. The zone is a mental space where you are doing more than just reading the collective mind, you are also in complete harmony with it. If this sounds a bit strange to you, ask yourself how it is that a flock of birds or a school of fish can change direction simultaneously. There must be a way in which they are linked to one another. If it is possible for people to become linked in the same way, then there will be times when information from those with whom we are linked can and will bleed through to our consciousness. To eliminate the emotional risk of trading, you have to neutralize your expectations about what the market will or will not do at any given moment, or in any given situation. You can do this by being willing to think from the market's perspective. Remember, the market is always communicating in probabilities. At the collective level, your edge may look perfect in every respect, but at the individual level, every trader who has the potential to act as a force on price movement can negate the positive outcome of that edge. A probabilistic mindset pertaining to trading consists of 5 fundamental truths. 1. Anything can happen. 2. You don't need to know what is going to happen next in order to make money. 3. There is a random distribution between wins and losses for any given set of variables that define an edge. 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. 5. Every moment in the market is unique. Keep in mind that your potential to experience emotional pain comes from the way you define and interpret the information you're exposed to. When you adopt these 5 truths, your expectations will always be in line with the psychological realities of the market environment. With the appropriate expectations, you will eliminate your potential to define and interpret market information as either painful or threatening, and you thereby effectively neutralize the emotional risk of trading. The idea is to create a carefree state of mind that completely accepts the fact that there are always unknown forces operating in the market. When you make these truths a fully functional part of your belief system, the rational part of your mind will defend these truths in the same way it defends any other belief you hold about the nature of trading. What prevents us from perceiving each now moment as an opportunity to do something for ourselves or to act appropriately even when we do? Our fears. What is the source of our fears? We know it's not the market, because from the market's perspective, the up and down ticks and the patterns they create are neither positively or negatively charged. As a result, the up and down ticks themselves have no capacity to cause us to enter into any particular state of mind, negative or positive, lose our objectivity, make errors, or take us out of the opportunity flow. If it's not the market that causes us to experience a negatively charged state of mind, then what does cause it? The way we define and interpret the information we perceive.